Welcome to Billionaire Investment. Today we decode why Elon Musk became the world's richest, not just by building products, but by designing capital. 3 core rules. Milestones unlock payouts. Standards create network effects. Subscribers generate cash flow that funds long-term CapEx. This video doesn't tour products, it follows the money, who invested, when they invested, and which milestones unlocked valuation. We close by settling the books with KPYS, no hype, just numbers. In 1999, Musk put $12 million into X.com, a daring online bank in the dial-up era. A year later, X.com merged with Confinity, rebranded as PayPal, and hit the biggest pain point in early e-commerce: trust between strangers. The formula was simple yet effective. Pay by email, offer fast refunds, and utilize an anti-fraud engine that learns from every transaction. Each new seller pulled in more buyers. Each new buyer pulled in more sellers. Network effects compounded. In 2002, eBay acquired PayPal for $1.5 billion in stock, making it the default payment method on the largest auction platform of the time. For Musk, this wasn't just an exit. It was liquidity at the inflection point of a network. He pocketed roughly $175 to $176 million thanks to a high ownership stake. That cash seed immediately flowed into 2 idea reactors: $100 million to seed SpaceX and $6.5 million to lead Tesla's Series A. Deals that sounded crazy to traditional banks. No PayPal, no runway money for SpaceX and Tesla. SpaceX launched in 2002. The market called it a money pit. The escape route: convert technical risk into milestone-based contracts. From 2006 to 2012, NASA's COTS program paid upon acceptance milestones up to $396 million. In December 2008 came CRS, 12 missions worth $1.6 billion to resupply the ISS. Together, these worked like conditional credit lines. Hit the milestone, get the cash, carrying SpaceX through the R&D valley of death without selling the company cheap or taking expensive debt. When first stage reuse became real, cost per kilogram collapsed. Higher launch cadence drove a learning curve, each flight cheaper than the last. By 2024 to 2025, secondary/tender transactions valued SpaceX around $350 billion, with internal talk of $400 billion, the market confirming the flywheel. Then came layer 2, Starlink. From a launch company to a global network operator, households off-grid, maritime, aviation, public agencies. In 2025, Musk said SpaceX revenue was about $15.5 billion, driven by launches plus Starlink. More important than the amount is the quality of cash, recurring revenue. That subscriber cash flow funds Starship's massive capital expenditure without begging for capital at any price. As in-house launches lower cost, Starlink's unit economics improve. Terminals get cheaper, ARPU expands by segment, churn falls as coverage densifies. Capital formula: crystal clear. Milestones turn risk into money. Subscribers turn money into a printer for the Starship dream. Tesla and energy tell the story of standardization. When NACS became SAEJ 3400, Tesla's charging network shifted from private asset to industry standard. OEMs joined, traffic rose, unit economics improved, and the asset's valuation regime shifted. In energy, Megapack plus O&M converts one-time sales into life-cycle cash flows over 15 to 20 years. KPIS to track new storage kilowatt hours installed per quarter and the downward trend in dollars per kilowatt hour. Once infrastructure standards are accepted and cash flows are predictable, investors pay up. The effective cost of capital falls. Standardization is the invisible lever the market is repricing. Neuralink showcases the cell risk reduction playbook. In 2023, the FDA approved human trials. In 2024, the first implant delivered safety/function signals like cursor control and text input. By May-June 2025, Neuralink raised roughly $600 to $650 million at about a $9 billion valuation. not because revenue exploded, but because technical and regulatory risk had been quantified by concrete milestones. The typical biomed path: preclinical, breakthrough, FDA, first in human, expand indications, quadriplegia, speech disorders, standardized surgical workflow. Each approval acts like a cut to the company's implied discount rate. Future unit economics aim to shorten OR time, reduce complications, extend signal durability, boost bandwidth, and lower cost per case via robotics, shifting margin from hardware to software / decoding and post-op services. Neuralink isn't selling money now, it's selling a declining risk trajectory, and capital markets price that curve. The Boring Company is a lesson in modular standardization to replicate capital. In April 2022, Series C raised $675 million at roughly $5.675 billion. The goal wasn't just digging tunnels, it was standardizing the line: TBM design, spoil logistics, segment installation, ventilation, fire safety, and Vegas Pilot SOPS, where every metric can be measured. Once a segment runs at peak hour throughput and passes safety, risk shifts from expensive technical risk to comparatively cheaper construction / permitting risk. When cost per mile falls, throughput rises, and permitting times shrink, the module can be copy-pasted to resorts, convention centers, airports. KPIS, packs per hour, cost per mile, evacuation time. TBC wins when a tunnel becomes a modular product and capital unlocks itself. The bigger picture across 5 mega projects is responsible innovation. The bright side: EVs plus storage cut transport emissions and stabilize grids. Starlink expands bandwidth for remote, sea, and air. PayPal empowered SMEs to transact. Neuralink restores function for disabled patients. TBC increases urban capacity with modular tunnels. The dark side: battery supply chain externalities and labor conditions. Astronomy impacts and orbital debris from mega constellations. Private control over critical infrastructure. Neuroethics and privacy, and construction / operations safety. Innovation isn't free. Every step forward needs a matching layer of safeguards. This channel doesn't sugarcoat. We log benefits and externalities. Now let's settle the books with quarterly KPIs. Numbers, not hype. SpaceX Starlink launches per year, booster reflights, estimated dollars per kilogram downward trend, subscribers, ARPU churn. Tesla / energy, storage kilowatt hours installed, dollars per kilowatt hour trend. Neuralink, number of clinical cases, signal durability, adverse events. The Boring Company, packs per hour, cost per mile, evacuation time. If Starlink's ARPU rises and churn drops, Starship gains financial fuel. If megapack kilowatt hours grow while dollars per kilowatt hour falls, the energy infrastructure flywheel should show up in valuation. If Neuralink scales cases with durable signals and low adverse events, the forward discount rate keeps falling. If Vegas Loop hits throughput and cost per mile declines, TBC's module expands faster geographically. Bottom line: Musk doesn't just design products, he designs cash flows. Milestones convert risk into conditional cash. Standards convert private assets into public infrastructure, pulling in an ecosystem. Subscribers convert one-off sales into monthly cash that funds long-term capital expenditures. That's the money map that turns crazy ideas into a trillion-dollar empire. From here, the only question is, which KPIS will confirm or contradict this thesis next quarter? Quick recap before you go. PayPal built the cash runway. SpaceX used milestones to survive, reused to bend cost curves, and Starlink to print steady cash. Tesla used J3400 to pull a charging network into a standard. Megapack turned one-off sales into lifecycle money. Neuralink sold validated risk down via FDA milestones and human cases. TBC standardized modules to replicate. 3 rules: milestones, standards, subscribers, compose the capital design frame. Remember the 3 checks each quarter: SpaceX launch tempo and dollar per kilogram, Starlink RPU per churn, and energy's kilowatt hours added and dollar per kilowatt hour. When those lines converge, valuation moves, no slogans needed. If this capital playbook helps, like so the algorithm doesn't bury complex content, share with someone who needs a practical financing model, and subscribe for quarterly KPI updates. Comment now, which metric should we track first? Starlink ARPU, Megapack MWH, or Neuralink clinical cases. This is Billionaire Investment, where we decode bold investments and the quiet power plays reshaping the world with data and long-term discipline. See you in the next episode. Standard Wars J3400 and the Charging Station Game.